Welcome to the WangHiro podcast, where we answer Malaysians' burning questions about personal finance with fact-based answers.
Birkenstock makes some of the most comfiest shoes in the world. The brand, which started in the 18th century as Johann Adam Birkenstock, is currently slated to IPO with a valuation of $8 billion. You may love your pair of Birkenstock shoes, but should you invest in the company behind it? Welcome back to Stock Investing from Zero on WangHiro, where we put a beginner's lens on companies and help you decide if you should invest.
So, Louis, since you're a lady, do you own a pair or are you a fan of Birkenstock shoes?
Yeah, interesting question. Actually, I know a lot of my friends love Birkenstock. They actually own a few pairs. Personally, I don't like the design. Personally, it's a very maybe it doesn't fit my style. I don't like that kind of
shape.
I don't know how to call that, like these kinds.
Okay.
Like the flip flop style, like which just splits in
with a stick
I
in
forgot
between
that
your
it's
toe and the.
I forgot what it's called, but I don't like the design. It doesn't fit well with the clothes that I wear, I think, and also my body type. I feel like it makes my legs look very small. Not in a good way. Like it will look very tapered on my body. I think if it's like a certain body shape, it looks very casual. But nonetheless, I've tried those shoes out in the Birkenstock stores in Miri, and I found them very comfortable. It's just the style is not really my thing. How about you, John? Do you like them?
I look at the price, I turn off straight away.
Really? It's
no
like
just
200 something, right?
No, it's about 400 something. I mean,
400?
400 something.
Really?
Yeah. But don't get me wrong.
I haven't been there in a long time.
Yeah, I think they have an online store. I don't know how much is because I last checked.
That was about 10 years ago that I went into to try and didn't like it. So that was back then. It was 240 something. Yeah. Wow, it's gone up to 400.
400 something.
Wow.
I like my wife. She uses what's this brand? I can't remember. I know it's 400 plus a pair. She was very she was very heartbroken to want to buy. I said, no, for your shoes, and we're getting older, you should go and it's not Scholl. I can't remember what brand, but she bought one, and I was very happy to buy one for her. Don't get me wrong, I am more than willing to pay for good quality shoes. I've owned a Geox before. I don't know if you heard of Geox.
No.
It's about 600 over. I'll share with you more when we come to the valuation part. I've owned a pair. My most expensive pair of shoes, it's about 600 ringgit. It's a jogging shoes from Essex.
Oh, Essex.
I swear by Essex. I tried Adidas, Nike, whatever, right?
I heard they're very, very comfortable. But
oh my god!
For me, the style is so strange. Yeah, I don't know. Maybe I'm just. I know they're very, very comfortable. All my athletic friends recommend me Essex. Yeah.
Essex, yeah. I mean, if you tried Adidas, Nike, New Balance, I think New Balance is quite close. That's why they're quite expensive as well. There's this another one, Brooks running shoes, also quite comfortable. But I found Essex to be the best.
Yeah. Essex, it's good for it's good for like agility kind of things.
Correct.
Because it bends very well.
Correct.
That's my athletic friends tell me like when I was training. Like, buy a pair of Essex. It's good for running, whatever.
Yeah. So I think why I'm comparing those brands is because the price point of a Birkenstock shoe or a sandal is within that. So before we even dive into the products, maybe a little bit of history about Birkenstock. Founded in 1774, like what you mentioned, Johann Adam Birkenstock. 1896, I think the great-great-grandson developed what we know today as the flexible footbed sole, the insole, right? And in 1912, it was actually contoured. There's actually a contoured arch support. So, all these were revolutions at that point of time, a very great innovation. But what really propelled the brand, Louis, was actually in 1966, a German-American dressmaker called Margot Fraser. She actually brought a Birkenstock, it's a one-strap Madrid sandal to the US. And from there, it helped her heal her, she was on a trip to Bavaria? Yeah, Bavaria. And from there, when she brought it to America, it became hip culture. And, now it's like the Arizona. Okay, so I think a retro of it was actually the recent Barbie movie. There's a scene, there's actually a scene, and I'm going to show the scene. It was quite hilarious. I haven't watched the movie though,
Me
But when I was
neither.
reading, yeah, when I was reading, it was quite hilarious because
Your daughter doesn't like this kind of movie? I thought like,
she does, but I had to bring a son, and my son wanted to watch
oh,
another
right.
movie lah. So
right.
yeah, so there's this scene where Barbie has to choose to stay in Barbie land or to go to the real world, and the representation of the real world was actually a Birkenstock Arizona sandal. So that was pretty interesting. So it's like this is the reality of life, which is actually pretty comfortable, the sole, or Barbie's high heel shoes, and you continue staying in the Barbie world. So I thought that was pretty. And when the filmmakers, or no, when Birkenstock was actually asked about the filmmaker's choice, they were actually pretty happy. Birkenstock was very happy because that's exactly what we represent: the common man's food problem, comfort, and all that kind of thing lah. Yeah, so pretty interesting. Pretty interesting.
Yeah. I think to have that kind of like status in the world, especially like, wow, this is footwear brand which is quite well known. At this point, I think they're even like they're not even luxury yet. They're kind of like at that price range too.
Yeah, exactly. It's more the comfort. I think actually I went digging further, and probably we'll start off with the question of how do they make money and what does it sell, right? They'll struggle with no, I wouldn't even say struggle. I think the reason for the high price point is that everything is made in Europe. They don't have an outsource to Vietnam, based on what I read from the prospectus lah. They don't outsource it all. They don't go for like cheaper material. They maintain very high quality material, high quality craftsmanship in Europe. Okay, and that's why a lot of the sandals is actually expensively priced in Malaysia or in Asia, is because it takes a euro cost and convert it over to like Malaysian ringgit.
Right.
Yeah.
Right. But I mean, in those markets, are they like considered expensive, or is this just us?
Yeah, it's us. I mean, you think about it. An
Okay.
iPhone in iPhone, it's like $1,000 US, and if the median income in the US is about $3,000 to $4,000 US, it's like 1/3 or 1/4 of your salary. I mean, look at a car in the US. A Tesla, which is considered a luxury in the US, is only like 30,000 to 40,000, which is less than, it's about a year's of the median income of a person in the US. Whereas in Malaysia, you buy a Japanese car, a Japanese made car, is usually like double or sometimes half of that, double of that of a fresh graduate in Malaysia. You just imagine, in terms of pricing power, whatever, I think it's really that conversion rate lah. Yeah. So why they're bringing Birkenstock to listing is because I think the private equity owners want to cash out, because currently the majority stake of Birkenstock is owned by this guy called private equity called L Catterton. And guess who owns L Catterton? It's actually a luxury brand. It's Louis Vuitton. Louis Vuitton owns L Catterton.
Wow, I mean, they even have a
Yeah.
capital firm like that.
Yes. So
is it to just acquire different companies?
I give you another example. You know Li Ka-shing?
Li Ka-shing, yes.
Okay, Li Ka-shing has a private equity arm, and they were the first to buy into Facebook's first round of raise. The private equity arm. So these are like, it's his like private vehicle that once it grows big, only then they inject back into the public vehicle. So this is like they're taking bets. Yeah, they're taking bets on like up and coming trends, up and coming companies, and buy them when they're small, when they're unknown, and then do it as privately and as quietly as possible.
Makes sense. I mean, before we dive deeper into it, I had some questions around like the evaluation of pre-IPO companies, right? Because like all this time we on this series Stock Investing from Zero, we've been doing like companies that are already public, right? But now Birkenstock on the way to being public, there's some hurdles, but evaluating pre-IPO and IPO, any difference or anything we have to like be concerned with?
Yes. I wouldn't do justice by explaining it briefly here, but I'll try. What I'll do is this. The two main differences will be one, pre-IPO stocks, or what we call private companies, right? The prices are actually determined by the investment rounds. So what do I mean? So if you're a startup, you're an angel investor, we call it pre-seed money, right? The moment you come to a point where you have someone like a Sequoia or someone like a Teal Foundation coming in, the big guys actually determine the price. Because let's just say if Sequoia comes in and say, "Oh, I value you at like 10 billion, and I'm gonna pay like 1 billion for a 10% or something like that," right? The pricing round is determined by the major investors. Whereas in the public markets, how you evaluate is the pricing round is actually it's a free market. The price discovery is very transparent, it's very open. So in terms of pricing, public markets are much more efficient than that of a private market. Sorry, and
which just means that it could be overpriced most of the time.
correct.
Oh,
Because valuation, when you for an IPO company, you think about it, Louis, the owners, if they want to exit at the highest point.
True.
But the buyers, you always want to buy at the lowest point, ma. So that's why the market efficiency, where price discovery is transparent, that's why it's a more efficient market. But at a private company, yes, the numbers may look good. Yes, the corporate structure may look good on the surface. But once you don't know, you see, the moment you become public, then you have to disclose a lot of your corporate governance, your accounts, your behavior, management, all that kind of thing. And you are out in the public eye for people to evaluate you. As a private company, there's a lot of hidden things behind that you may not know, the nuance. It may be good, it may be bad. You don't know. It's a question mark. So there are major differences. I think if you want to, the key for investing in private companies, you really have to build relationships.
But most of retail investors can't get to that level.
No, you don't have that kind of access. Yeah.
Okay. That's yeah. Okay. So to our audience out there, you have to keep that in mind as we evaluate this. This is a private company still waiting for the IPO. So we're just evaluating based on what is known, right? We can't know everything because it's not public yet. So John, you can start.
So question number one, what business are they in, and how do they make money? They're obviously in the business of selling sandals, shoes, footwear lah. Okay, for lack of a better word, footwear. When Catterton bought them over, they really ramped up their sales. They actually took majority ownership in 2021. And what happened was that in 2021, the sales grew from, prior to that, 2020, COVID year, 2020, 2021, 728 billion. Wait, sorry, 728 million, 962 million in 2021. And this year, 9 months is already surpassed. It's about 1.2 billion. 1.2 billion in terms of sales. So they really ramped it up. I think that they want to show the world how they have a lot of untapped markets, because especially in Asia Pacific, where the brand it has presence, but it's not as strong as your Essex, your Nike, even your Skechers, right?
For sure.
Yeah. So what's impressive about their growth over the past few years is this: revenues increased by about 2-year CAGR, 30%. Okay. Number of units sold, 12%. Number of units are SKUs, all right? The ASP, or the average selling price, has increased by about 16% over the past 2 years as well. So everything is just even gross profit margins expanded to 55%. So obviously, as a PE, they would want to squeeze as much as possible. They would definitely want to squeeze as much as possible, right? So
I mean, John's pause there. Like, where do we get this information again?
A lot of it is from the prospectus. So it's actually in the US, if you file for a local US company, it's called an S1. In Malaysia, it's called a prospectus. But if you're a foreign company but filing on the Nasdaq, you call it an F1. F1. Okay. Yeah. So the prospectus usually 400-500 pages long one. A lot can be read. Not many people want to read it, to be honest. But I feel that if you want to be a really good investor, that's actually your first starting point, because it reveals so much information there.
So would you read all 500 pages?
No, definitely not. There are certain key areas that I'll go to, and it helps me to be efficient, because if those key areas yield interesting insights, then only I will invest my time to do more. But if it's not, right? Like, you remember we covered Lilu probably about 2 weeks ago. He has what we call a 5-minute test. So he will look at the financial statements, understand the business, and from the numbers on the balance sheet and the projections of his cash flow or free cash flow, he will say, okay, 5-minute test passed, worth my time, I'll dig deeper. But if not, move on. Next. Because there's over 100,000 companies, Louis. So how do you your time to be efficient, And then now new IPOs coming on again. So you see. Yeah.
Okay. Yeah, just because usually we have ticker for this, right? So for now we don't. So if any of you are interested, I'll leave a link as well in our show notes. Okay, so make sure to go to the show notes to have a look at where this is. Otherwise, you can search for the Birkenstock F1.
Yeah. Okay. So second question, are they profitable, financially stable? I think I answered that already. Yeah, I think 1.2 billion in sales, net profit for 9 months ending September this year was 187 million. Okay, 187 million. You talk about what is the addressable market? How big is this? How big is this market? So they actually commissioned a report with Euromonitor, and the footwear retail space is about 340 million euros 2022. Top 5 brands accounting for 20%. It's a very fragmented market. Very fragmented market. They project that this global footwear market will grow by about 5.1% CAGR over the next 5 years. So you take 340 billion euros, you put a CAGR of 5% every year. So over the next 5 years, it will grow to about 440 billion by 2027. Okay.
Wow.
So right now, Birkenstock believes their market penetration is only 1% of the entire market. Very, very small. They believe there's a lot of white space, especially in Asia Pacific. That's why they want to expand here. And Asia Pacific footwear market is growing by about 5.9%. Yeah, so much faster than the rest of the world. Are they cheap or expensive, Louis? Here comes the prickly question.
Mm-hmm.
Right now, valuation is about 10 billion, 9.2 billion euros. Okay, on a profit of 187 million. So if you think about it, if you take the market cap, the expected market cap is roughly about 10 billion, 9.2 billion, right? So your PE is roughly about 49 times. So if your market cap is 9.2 billion on a profit of 187 million, your PE is about 49 times, about 50 times.
Wow. It's quite
Yeah.
expensive.
So it's quite expensive on the high side. Hopefully, and they're trying to aim to raise about 1 over billion, right? I did a quick comparison. Nike is selling to you at about 30 times PE. Skechers about 16 times. And I told you about this company called Geox. You can go Google it, Louis. They have what we call breathable soles. So there's actually, you can actually, your sweat can actually, there's moisture expelling, but there's no moisture absorption. So it's a very special material that Geox has actually developed. Yeah, so they are selling about 11 times, but they're making losses. I just checked the numbers last night. They're making some losses. So
yeah,
it may
these
not
are
be
also
very good.
not the type of shoes I would wear. Very ugly.
Yeah,
No wonder I just never heard.
you don't. Yeah, you don't.
Yeah.
Yeah.
Okay. Yeah. Okay.
Yeah. So in a way, I think if you look at it as a whole, do they have somewhat of a moat? I think they do. Very hippie. I know it's an acquired taste, but very hippie. They have like a lot of huge personality brands actually own them, Louis. They actually like
Yeah, actually, like I think fashion wise, they quite trendy right now.
yeah, especially the Barbie thing, right? So I think I would conclude with this. Is it a good idea to invest? I would say at a valuation of 49 times, I think it's a good haul off for now. Yeah, it's a good haul off for now.
But like I mean, in general, though, since this is our first like pre-IPO
Pre-IPO.
episode, right? Just generally speaking, is it ever a good idea to invest in them? Are they usually too expensive?
Usually IPOs are not. I don't favor IPO buying because usually all the parties are interested at a higher valuation because you just imagine who needs to get paid: the bankers, the investment advisors, the accountants. All this is actually cost, and for the company, they don't want to dilute their shares because if they believe it's a good business, they don't want to dilute. So what happens is that they will dilute a little bit, just enough for mandatory requirement, and that pushes up the valuation because you want to raise as much money, but you want to dilute as little. So you think about the math. It's all math, right? Then secondly, all your listing advisors, your bankers all need to be paid. So someone's got to foot the bill, and the bill is actually by you and I as investors.
Yeah, so I mean, like, what's the rush then to buy? Is it like a FOMO thing?
What people will create is the FOMO lah, that the moment you list, then the share price will. I always believe there is always opportunity to buy later. But what I like about IPOs is that because they spend so much money creating the prospectus, it's the best research starting point. That's why that's the thing I like about IPOs, because people pay millions.
And I think that was like what happened with WeWork as well, right?
Correct. Correct.
IPO, and then everyone was like looking, and then found the loopholes inside.
Yeah.
Okay. Yeah, I think that about covers it for our analysis on Birkenstock.
Yeah.
So now let's move on to the last section of our episode, which is the investing book recommendation. So
Yes.
what's the investing book that you would recommend to our audience today, John?
Okay. The book that I recommend is actually 100 Bagger by Chris Mayer. And why I think that this book is actually worth your time is because Chris Mayer just followed up on another book by Michael Phelps that actually wrote about 100 Baggers as well. And they actually took years and years of data to actually exemplify what were the qualities that actually make a company a 100 bagger. And the forward, the most recent edition by by Chris, the forward was actually written by our own Malaysian Casey Chong actually.
Oh, that's interesting.
Yeah. So I'm gonna show the how the book actually looks like. Okay, so this is a 100 bagger. Very pale looking kind of cover, but actually very, very interesting content. So don't let the cover actually spoil your.
Judge a book by its cover.
That's right. I found it very useful because it profiled different companies, different CEOs, different things that you should look at. I don't want to spoil too much of the book. That's why I keep it brief. And more importantly is I think it reads more like a story rather than just throwing facts at you. So it actually like encompasses different angle of how this company actually what were kind of characteristics like owner operator. I'll give you one, owner operator. So because of owner operatorship, that's why people are actually vested into the company to actually grow it, rather than if you go to a multinational corporation and you don't have an owner operator. All these are hired guns, hired mercenaries. They're just employee CEOs, all right? So I think that kind of encompasses the value of this book.
That's interesting. I mean, also like maybe briefly explain what's a 100 bagger.
Oh yeah, sorry, so sorry.
You don't understand.
I took assumption. Okay, one bagger means 100% return. This term was actually coined by this guy called Peter Lynch. So Peter Lynch means I said I made a one bagger, means 100% of my money. I put in $100, I got another 100, so it's 200. Okay, so that's one bagger. So 100 baggers means 10,000%. I made 100 times of my money.
Wow, that's interesting.
So you put in $1, you get back $100. That's what it means by 100 baggers.
Okay. Thanks for the recommendation today, John. Hopefully I can also read this book soon. Okay, so guys, so that's all for today's analysis on Birkenstock's upcoming IPO and as well as John's book recommendation, The 100 Baggers. So now over to you. What do you think of our analysis of Birkenstock's IPO or upcoming IPO? Are you planning to invest in the IPO? Leave your answers in the comment sections below. If you enjoyed this episode or found it useful, make sure to give it a thumbs up as it will help us with the YouTube algorithm. And if you want more content like this on stock analysis for beginners, make sure to subscribe to WangHiro. We do this every single week. So thanks again for watching today's episode. We'll see you again in our next one. Bye-bye.